Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's session. My name is Ian Joseph, market analyst at HFM. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry, I'm here to help you look at the markets the right way. Devion, congratulations for being the first one to join the stream. Now, once again, welcome to the morning market call, whereby, as always, we usually start with the promotions that we do have currently ongoing in the spirit of 15 years, celebrating, providing you with the right platform, with the right products. We are offering you a few promotions. The first one being Battle of the Elite. How do you go to these? You own your HF platform, you want to go to the promotions segment. Okay, under the promotion segment, you do have what we are offering currently at the moment, starting off with Battle of the Elite round number 2, whereby you have an opportunity to become Kenya's Don Wabiz, claim the crown, win 650,000 Kenyan shillings. Number 1 is going to walk home with that money. Number 2 is going to walk home with 260,000 Kenyan shillings. Number 3 is going to walk home with 130,000 Kenyan shillings. We are going to have 10 winners in the lucky draw, walking home with $200 each. Now, how do you join? You go over to your HF under the promotion segment, join Battle of the Elite round number 2. Open a Battle of the Elite trading account and deposit at least $100, which is equivalent to 13,000 Kenyan shillings. Trade any asset and rank in the top 3 traders by percentage-wise of profit gain to win a cash prize. Looking at the leaderboard currently at the moment, we have Sami, who's up 47.65%. We have Moj number 3 at 4.51%, meaning if you deposit today $100 and you only make $5 today, you will be in the leaderboard, stand a chance to win the prize pool. Not only that, we do have the first 5 also, whereby there's a 325,000 Kenyan shillings prize pool. The competition is going to end in the next 5 days, whereby it's not only a marathon, it is a sprint, whereby speed is everything. The first one to trade will be the first one to win. We are going to have 5 winners walking home with 65,000 Kenyan shillings each. How do you join? Once again, you go over to your HF under the promotions, first 5, join round number 2. Trade 150 lot size in Forex, gold or silver using any account type. Be one of the first 5 traders to complete the trading requirements by 22nd of October and stand a chance to win 65,000 Kenyan shillings. Remember, last week we gave away more than $8,000 to you, the traders in Africa, in the spirit of celebrating, providing you with the best platform, with the best resources available. Now, moving over to the morning market call, whereby we are going to start with the upcoming earnings announcements, whereby we do have quite the interesting activity this month, whereby we are going to have earnings from American Express, Freeport, 3M, General Motors, Lam Research, General Electric. We're going to have earnings from Coca-Cola next week, Boeing and Company, Verizon Communications inclusive, Netflix, Mattel, Tesla, Barclays, Nasdaq, TAL Education, Hasbro, Hilton Worldwide, S&P Global, AT&T, Alcoa International Business, which is IBM Machines, SAP, which is all going to be released next week, including also Nokia, Technip. How do you know of this? You go over to the tools and education segment under the earnings calendar. You are going to receive this tab, whereby we do anticipate a lot of earnings. It is earnings season currently at the moment, and we will want to look at what these companies have made in the past. Now, switching gears to the economic calendar, whereby this is where we start our days, generate ideas from. Whenever I wake up in the morning, this is whereby I usually start to generate ideas. What am I going to look at? What has happened? What could happen? Hello, Christina. Whereby starting off with Australian dollar, whereby we did have employment numbers coming in earlier in the morning at exactly 3:30 a.m. today, whereby if I do click on this title here, it's going to bring me a short description. Once again, this is under the HFM website, Tools and Education Economic Calendar, whereby this is a data that usually looks at how employment change has positive implications on consumer spending, whereby the data, if it does come out positive, it means it's bullish for the Australian dollar, whereas if the data does come out negative, on the other hand, is seen as bearish for the United States dollar. Now, looking at this, if you click on the read official report, it's going to open a new tab whereby it's going to tell you the data, the statistics of what we had just received earlier on in the day, whereby unemployment in the Australian region did increase to 4.5%. Participation rate increased to 67%. Employment did increase to 14.64 million 200,000. Employment to population ratio remained at 64%, and the employment rate did increase to 5.9%. But we did see monthly hours worked increase to 1.987 million, meaning the productivity in the Australian region has increased over the past month. Now, full-time employment increased 8,700 people. Part-time employment did increase by 6,300 people. Now, looking at this information, we are going to look at the table whereby you can see the unemployment graph. This was during this spike to the upper side, was during the pandemic region, whereby we did see a lot of people being laid off as a result of the pandemic, but people started getting their jobs back. We did hit lows around 3.5. This was back in October of 2022, but we have been seeing unemployment start to tick to the upper side, whereby the data today has actually come out at 4.5%, which are highs last seen during February 2022, just after the pandemic. Now, looking at the trend numbers and the seasonally adjusted numbers, we usually focus on the trend because it's a much more smoother underlying value for us to look at, whereby it's going to exclude the high volatility spikes that we usually see, and it creates a clear picture of where the employment is headed to. Moving over to going back to the economic calendar once again, today is day number 3 of whereby we are having IMF meetings, and we want to look at what these people have in store for us. And there's an article here whereby global government debt on course to hit 100% of GDP by 2029. Quite interesting. This will be the highest since the aftermath of the Second World War, with UK among the G20 countries forecast to peak above. Now, GDP across the world is on course to hit 100% of global domestic product, whereby in 2029, according to analysis by the IMF, the highest level once again since the Second World War. In its fiscal monetary report, the IMF said aggregate government debt had risen more rapidly than expected before the COVID pandemic, when policymakers stepped in to protect citizens and bail out hard-hit businesses. And we did see happening to the Fed Reserve, whereby the most recent meeting we had of Fed Chair Jerome Powell, he did mention about, yes, we are coming from that period of how the Fed Reserve came and rescued the United States market by releasing reserves that it had in store. Now, not only the United States, we are seeing these everywhere in the world currently at the moment. Hello, Jessless Boy. It urged governments to switch spending to growth-friendly areas such as infrastructure and education to help bolster world economy and make debts more sustainable. Now, 100% global GDP ratio will be the highest since 1948, when the world's large economies had been devastated by 6 years of war, and the cost of rebuilding had ravaged their countries. Now, among the G20 countries, we are looking at France, Japan, Canada, China, and the US among UK to be affected as a result. The IMF said there are still upward pressures on spending in many countries, along a reluctance to impose tax rises on skeptical voters. Now, looming expenditures on defense, natural disasters, disruptive technologies, demographics, and development add to public spending demands. All these pressures and demands come together with sharp political red lines against tax increases and diminished public awareness of fiscal limits, it did mention. Very interesting noting the meetings are currently ongoing, and for us traders, we want to look at the tone. Does this mean this is going to be much more beneficial to safer havens? What are we going to see happen to gold? What are we going to see happen to the silver metal, the Swiss franc, the Japanese yen? And we're going to look into those assets in just a moment's time. I would want you to share with me which are some of the assets that you want me to look into in my charts as we switch over to MetaTrader in just a few moments time. Now going back to the economic calendar, that was during Asian session. During London session, we had Britain releasing their manufacturing production numbers, and looking at it, it was quite worrying, whereby we have seen production output was estimated to have decreased by 0.3% during the 3 months to August of 2025 compared with the 3 months to May of 2025. Little Keen wants us to look at XAUSD, just less boy, GBP USD and USD JPY as usual. We shall look into that in just a moment's time. Now, the largest negative contributor to the 3-month fall in August 2025, electricity and gas was down 2.6%. This was partially offset by increases in water supply and sewage and mining and quarrying, while manufacturing remained relatively flat. Now, the decline in electricity and gas during the 3 months to August 2025 came from manufacture of gas. This was partly because of a strong growth in March of 2025. Now, we are looking at this data and we want to look at the British pound against the United States dollar. Why did prices move today in the morning as it did? Just less boy once again wants us to look at British pound against the United States dollar. Now, switching gears back to later in the day, just to point it out, we do have ECB President Lagarde releasing a speech in the next 8 hours, 16 minutes as per the time of recording. Then we are going to have Bank of Canada Governor Macklem releasing the speech also at exactly 8:30 local Nairobi time. Now, this is whereby I want us to switch gears over to the platform. I want us to look at what is happening currently on the screens, and I want to share my execution platform here. So this is my MetaTrader currently at the moment, and we are going to start with gold, the precious metal, God's money, essentially the metal that has been there ever since the beginning of time. And currently at the moment, what a time to be alive. We are seeing gold prices at all-time high, whereby during Asian session today, we did see gold tap into $4,242.81 an ounce, the highest we have ever seen gold. And yesterday during morning market call, we did mention about 42.50. Quite interesting, whereby could we see 42.50 before the day does end today? There's only one way to find out. Remember, this is not financial advice. It's only for educational and informative purposes only, whereby look at price action currently at the moment. We did see prices open up. The first 3 hours of Asian session, prices did relatively nothing. But as time progressed on, we did see prices pushed to the upper side during Asian session quite aggressively. We had some signs of sellers coming into the market, going below the opening price of the daily candle, but we are getting signs of buyers pushing this market back to the upper side. If we do get candlesticks that close well above this region, which is 41.85, I would want to see gold moving further to the upper side. Now, where we are currently at the moment, round numbers, psychological levels are the place to target. Now, whenever the ceiling has been broken, whereby, let's say, for example, gold is at all-time highs. We have never, ever been on these territories prior. You ask yourself, the ceiling has been broken. Where could the next potential price point be? And this is whereby you consult round figures, whereby we did mention of 42.50, but 42.50 is very near from where we are currently at the moment. Looking at from where candlesticks are to 42.50 is less than 200 pips away, which is quite achievable for gold, considering gold can move quite a significant amount of pips per day, meaning the next possible target that I would want to look at is $4,300 an ounce. I was looking at articles whereby there are speculations before the end of next year, we might see gold in 2026. There's a very high probability we might see gold tapping into $4,900 an ounce. Quite interesting. That's a lot of money. That's a lot of opportunities for us as traders to participate in. With everything that's happening at the moment, we are looking at IMF signaling warnings. We are looking at the government shutdown in the United States currently at the moment. We are looking at tariffs between China and the United States. We are looking at de-dollarization. We are looking at central banks buying a lot of the precious metal. Gold currently at the moment, the shiny metal, God's metal, once again, is the safe haven at the moment. Now, gold has a younger brother by the name silver. And could this be the next big thing in the markets after gold, whereby we are seeing silver tap into $52 an ounce? Yesterday we did tap into 53. Actually, it was the start of today's session whereby we did see silver metal tap into $53.545 an ounce, the highest we have ever seen on the silver metal, whereby institutions currently at the moment are favoring safer havens with everything that's happening currently at the moment. I would want to look at more net long opportunities if prices do close above the highs that was formed around $53.5 an ounce. Whereas, as traders, we always react to prices, meaning there's always that possibility prices could close below this region of support that you do have below 52.372 region, whereby if you do get a candlestick that closes well below that region, I would want to look for selling opportunities. We do have a question from Little Kino. Do you advise one to wait for the right trading hours, or do you just flip the switch regardless the time, be it 12 or 1? That's a very beautiful question, Little Kino. Then you need to ask yourself, which pair are you trading? Okay, if I was to pull up, okay, this is what I teach in the classes, but let me just answer your question at the moment, whereby it depends on the asset you're looking at. It depends on what type of a trader you're looking at. If you are a scalper, you do depend on looking at small time frames. And if you're looking at smaller time frames, you anticipate volatility within that short time frame, which means that if you buy the markets, you want to anticipate the markets moving aggressively at that point in time. So let's say, for example, I'm a scalper. Okay, I just want to touch on this for a moment. Let's say, for example, I'm a scalper, meaning I focus on the lower time frame, the 1 minute time frame, let's say the 5 minute time frame, and I'm trading an asset like, let's say, for example, USD Canadian dollar. Now, this asset is going to be very volatile after New York Open. So the dollar and the Canadian dollar is going to be active after New York Open. I cannot trade this pair. Yes, I can, but it will be meaningless to trade this pair during Asian session. Why? Because these assets are both closed. Okay. So it depends on what type of a trader you're going to be. If you're looking at an asset like, let's say, for example, New Zealand dollar against the Japanese yen, now this is a pair that moves during Asian session, meaning I want to focus on this pair during Asian session. It won't be wise for me to scalp this pair during New York session. Why? Because both of these pairs are closed at the moment. So to answer your question, yes, timing, it does matter depending on the type of trader you are. If you're a swing trader, sessions are going to open, sessions are going to close. So meaning it's not going to be heavily dependent on your time of entry, but the type of trader does matter. Okay, you only trade gold at COMEX and NYSE. Beautiful. Birds of the same feather. I also do trade gold at COMEX, which currently at the moment, it does open at exactly 320. By the end of next month, it's going to be 420. Quite interesting, whereby COMEX is the largest exchange of derivatives and gold derivatives in the United States of America, meaning there's a high likelihood prices usually move at that particular moment in time. Now, there was a question, there was a GBP USD and USD JPY. So looking at British pound against the dollar, whereby ever since yesterday, we did see prices move to the upper side. Now, this massive push to the downside was when we did release, we received data for unemployment for the British pound, whereby it did come out slightly negative, and we did see prices move to the downside. But most important thing is that look at how candlesticks tapped into these lows on 10th of October, but the markets closed well above that region, almost close to where the opening price of that daily candle was. And then yesterday, prices rallied to the upper side. And today we have seen, ever since Asian session, prices move to the upper side. And this could be quite significant for us, meaning, yes, we are looking at the British pound potentially becoming a safer haven compared to the United States dollar, if at all what is happening currently at the moment with the tariffs is going to persist. If we do close above that region, I would want to look at 1.34915 in the next few trading sessions, potentially prices coming back to this region. Now, today's Thursday, meaning the weekly candle has only today and tomorrow for it to close. I would want to be careful if I'm going to swing these positions in the near future. Okay, but if I'm scalping positions, it's going to be dependent on what is going to happen right now. At the moment, we have 8 minutes before this 1 hour candlestick to close, and I want to be very cautious about what is going to happen. Now, tomorrow is going to be a holiday for us in Kenya. We won't have, I do believe we won't have the morning market call, but I shall keep you posted. And on Monday next week is also going to be Diwali, whereby there's a high likelihood we are also not going to have the morning market call, but we shall be in touch. We shall be sharing on our socials. Kindly go follow all of our socials on YouTube, on Instagram, on X. We are going to release information as the day unfolds. Now, looking at the dollar against the Japanese yen, we did mention yesterday that, yeah, we did have Takaichi being sworn in as the next prime minister for the Japanese region, and we are looking at this trend to the downside, whereby there's a high likelihood prices will continue moving further to the downside. If we do get candlesticks that close below this region, I would want to look at more net selling opportunities potentially coming to these regions of inefficiencies. This is almost 200 pips away, which is a good tradable region for currencies if you're practicing trading on USD against the Japanese yen. We are looking at Bank of Japan increasing rates, in the near future, whereby there's a high likelihood we are going to see strength in the Japanese yen, while at the same time we are looking at 2 more interest rate cuts in the United States region, whereby we do anticipate prices of the dollar weakening against the Japanese yen, meaning the long-term trend is more likely to be on the downside, but that doesn't mean we are not going to see bullish days. Now, we have a question from Christina. What are the main factors that affect gold and silver? I can only think of geopolitical. Now, when you look at the precious metal, let's say, for example, gold, it's also used in manufacturing, but it's the biggest components of gold is used in jewelry. Let's say, for example, India are the biggest consumers of gold in terms of jewelry. But looking at the precious metal, again, it is a safe haven. Why? Because if investors have fear in fiat currency, remember, fiat currency is printed out of thin air, technically speaking. If central banks want to print money, they can't print money, but it has to be backed by something. In the past, gold, the dollar was backed by gold up until President Nixon took the dollar off the gold standard in 1974. Now, when that happened, before that period, whenever you produced, let's say, whenever you printed like $1, you would have needed at least an equivalent of $1 in reserves, so that in case anything does happen, yes, your money is still going to hold value. But when the dollar was taken off the gold standard, we did see a lot of printing take place. And as a result of that, we are seeing the effects currently at the moment. Let's take, for example, a hardworking person who does mjengo, let's say, for example. He's going to work hard, be paid $10. His $10, he did sacrifice a lot to get that $10. But at the end of the day, let's say, for example, the central bank decides to print $10 trillion. You're going to see that, okay, his $10 are now going to be meaningless because they're not now going to be more dollars in circulation. Now, we are going back to a region of whereby we would want reserves, and this is going to be very important in the next few years, whereby we are seeing central banks running off to gold. Whenever they print money, they need to have backing in terms of reserves. So gold is not only affected by geopolitical tensions, there's a lot of factors that go behind the precious metal currently appreciating. And once again, gold is God's money. It has been there ever since the beginning of time. Whenever there's doubt of what human beings have done, people usually go back to the drawing board, and the drawing board is that precious yellow metal. Now, looking at USD yen, I do believe we will have analyzed this. Currently, prices are approaching the trend line that we do have. I would want to look at equities, starting with the US 500. Now, the government has still shut down. We haven't received non-farm payrolls. We haven't received inflationary numbers. The commitment of traders has not yet been updated. And we would want to look at oncoming data. What is going to happen in the near future? We are looking at earnings season, whereby we do anticipate earnings for major companies, including NVIDIA, including Apple, including AMD, which are tech-heavy industries. And if the earnings does come out positive, we might anticipate the S&P 500 moving further to the upper side. Now, currently at the moment, the S&P 500 is really, really bullish as a result of the AI boom that we are seeing in the United States of America. And could there be more to where this came from? There's only one way to find out. I would like to conclude this morning wrap up by mentioning there are a lot of opportunities for us at this moment in time. This is the right time to trade. When you go over to the HFM platform, we offer everything, over 1,000 instruments that you can trade. Go over to the HFM platform. We have promotions, we have bonuses. Everything that you need for a trader is available under one umbrella, made to you possible by none other than HFM. That's going to be it for me. Stay safe. Take care of yourselves. We do have a question from East Africa, I do believe. Yeah, we are not going to have a morning market call tomorrow. We are not going to have a morning market call on Monday. I shall see you on Tuesday morning, I do believe. So God willing, stay safe, take care of yourselves. Remember, the probabilities are there. The most important thing for you as a trader is to reach out, execute on those probabilities. I shall see you. May God protect you. May your enemies respect you. May death neglect you and your family. Stay safe. Take care.